me?
Can
you guys hear me? Okay. I don't know. Something weird is happening today. Anyways, today's topic is impaired risk disability, turn a declined case into a sale. Our presenters are Jeff Tabor, Director of Sales, and Trish Boone, Underwriting Director at Risk Insurance. Please note that all lines will be muted during this webinar. If you'd like to ask a question, please go to the question pane on your control panel and type it in. We will answer the questions at the end of the webinar. Also, please note that we are recording this webinar. It will be sent to you along with the presentation in a follow-up email, and you should receive that by tomorrow. Okay, I'm now going to turn this over to Jeff. Let's get started.
Perfect. Thanks, Tracy. Appreciate you giving us the opportunity to talk to everybody today. Again, I'm Jeff Tabor. I'm the Director of Sales with Risk Insurance and Insurance Solutions. I also have with me Trish Boone, who is our head underwriter, and she'll be here to help along with some underwriting questions in the presentation that we have for you all today. And basically what we're going to be talking about today is risk insurance on the impaired risk cases that you have that are declined by traditional carriers, cases that you don't see a fit for within the traditional marketplace. So with that, let me tell you a little bit about us and what we have. Is that we have two opportunities, two distinct different products for you with your declined, tough insurable cases. We have FSL, which is Fidelity Security Life, and we have Lloyd's of London. The product on the FSL is a Easy DI, and on the Lloyd's side is Advantage DI. The marketing and underwriting is going to be done with risk and impaired disability underwriters. And what those are two distinct carriers, but they are one underwriting company. And who is Risk? Risk is basically a large specialty risk management organization. We are the leader in non-standard disability. We are a niche product specialist within the niche market. You could call yourself as disability has turned almost into a niche marketplace, and we strictly specialize in the impaired risk nature. So we're looking to help you place cases that have been declined. Our only product line is the disability. We're not a BGA or an MGA. We work with BGAs and MGAs around the country, with the Plus Group being one of those. And what we do is we provide products and services for the brokerage network and the end user, which is you, the broker. We were the first to market with this type of a product, and we administer these types of plans. Well, we've been doing this for 25 plus years. We handle all of the advertising, marketing, distribution support, and such as sales, commissions, the administration and development, and all of the billing is what we handle for our products, both with Fidelity Security and the Lloyd's of London. And what does the impact have on you when you get declined from a traditional carrier? Well, what you've done is you've invested your efforts. You know, loss of time is key to you. You've been processing that case. You've been out talking to the individual. You're trying to cross-sell to that client. And maybe because of declination, that relationship is on thin ice. You may have lost some commissions. That client is frustrated. Well, what you now have is you have some options. You're not going to lose any credibility. You're not going to have a frustrated client because now through our two different products, you can provide a unique solution to your client. So what you would do is, before you go back to your client and say, hey, I have bad news for you, and you have to start the whole sale process because they could be upset that you have a declination, is I would go, once you get that case that's going to be declined, go to your contact at the Plus Group and say, hey, what can we do? And most times they're going to give you that offer before you receive. And you can go back to the client and say, hey, I have bad news. You have some medical history that's not going to allow us to pursue a case with a traditional marketplace carrier. We have two different options for you. So you don't have to resell that case and tell them start from scratch and give them the need for disability. You already have done that in the past. Now we just have to put this all in the context of that decline and let them know that we're still providing some financial security. We're giving you some income protection. It's for the safety of your family and the initial need of coverage we're trying to give them.
Can I interject real quick? Jeff, interject real quick. By partnering with your Plus Group general agencies, when you're selling a DI case, if you have someone that you notice has a lot of medical history, the Plus Group partners are so they're experts in this field. They know ahead of time in a lot of cases, you know what, I'm not going to get this to care. They take the effort and the time to actually pick up the phone and call and ask around with the standard disability carriers if they would even consider a case. So that way, if there is one that's going to be declined, you're not taking the time and sending your client through underwriting with the standard carrier knowing it's going to be declined. You know, that brings on a level of frustration. So you're the Plus Group partners that you work with then know to come directly to us, carrier, to save yourself the time and the declination, and then just you tell them up front, you know what, we're not going to be able to get this through standard market. Let's go right to some risk carriers that can do something with this. That's all, Jeff. Thanks.
Thanks, Trishan. And I'll just add on that is we are trying to get that information. The more information, the better, as with any case you underwrite. But it's especially true when dealing with the impaired risk. On that medical side, the more information we have, the better offer we can give you up front. And again, obviously, full underwriting rule could change that, but the more information we have, the less you will resell that product or policy or quote once it gets into full underwriting, because we'll give you the best offer right out of the gate. Again, there's two options. As we begin here, option one is the Fidelity Security Easy DI, and then the Lloyd's of London. And I'm going to get into those in a little bit about what the difference is between those two. But let's put it into perspective. The odds of becoming disability are much higher for impaired cases. Typically it's 1 in 3 would be disabled. It's going to be higher with the impaired cases. And the risks are just becoming even more so when you are, have on camera. What we do to make it easier for you to sell, we're very, very, very quick with our response time. We're less than 24 hours out to you with the quote once we have that information that we need, and that's going to include everything: name, date of birth, occupation, what state they reside in, their income, and then again, as much information on that medical history you can give us. Very high acceptance ratios. What we're seeing is that we can make an offer on 90% of the cases that we see. So if it comes in the door and we look at it 90% of the time, we're going to make some sort of offer to you. And it may be highly excluded, but we can make an offer to you, and at the end of the day, you will have something to sell your client. And again, those decline cases into dollars, place those applications that you have, build your reputation as a DI expert out in the marketplace. As a broker, you want to be known that you can get anything done, to provide yourself as that expert. Let's get into the product features. The Platinum Easy Select overview. What it is, it's a guaranteed renewable program. It's a 5-year benefit period. We can do up to $15,000 per month of benefit regardless of that occupation. And it is graded, so let's talk about that. In the first policy year, we will grade the policy 40%. In the second policy year, we're going to grade it 75%. After that, there'll be no grade, it'll be 100% coverage. We are only doing that. It's going to be graded to not for accidents, just for injuries. And then we have a large choice of benefit periods up to 5-year, your 1, your 2, your 3, your 4 benefit period, your elimination periods, your 60, 90, 180, 365, just like a traditional DI carrier. And then on the IDU, what is it? Well, it's a term plan. It's your typical Lloyd's plan, but it's much more than that. We can make this specifically designed for your client. We have the ability to think outside the box. We can grade a specific impairment. We can have no grading. We can exclude. We can mix and match benefit periods, elimination periods with certain elements. We can put together a customized plan for your client that we think will allow you to sell the case. So let's just look at it quickly here. On the EZDI, underwriting is only going to be done once. It's a guarantee renewable policy. We're going to underwrite it on the upfront. Other than that, we're not going to look at it again. On the Lloyd's policy, the Advantage DI, this can be underwritten a couple times. It can be underwritten on the beginning, or it can be underwritten upon the renewal. And the renewal is basically going to be a 1 to 2 or 3 or 5-year term period. And how that renewal process works is, upon the end of that term, there's an insurability statement. And basically on that insurability statement, you have to see, they're going to ask you questions if your health has changed. Well, considering the marketplace that we're going after, the impaired risk marketplace, the chances of health changing are probably going to be a little more than your average Lloyd's policy. It could change for the better, or it could change for the worse. But we're going to look at how it's changed, and at that time, the underwriter will make that decision whether there would be any type of additional underwriting done, whether it's an APS, labs, things of that nature. Again, no term on the EZDI. It's issued. Basically, it's a lifetime policy with level premium. We have not raised our premium in 25 years. On exams, this is one great thing on the EZDI. Up to $13,000 a monthly benefit, we will not require in exams. Anything over that is on a case-by-case basis. Exams on the Advantage, we may get that right at the beginning, or we could do it upon the renewal. Both policies will issue up to $15,000 a month. If needed, you have a high-income earning client that has an impaired disabling sickness or accident or something like that, we can stack this to give them a total of $30,000 per month. On the benefit period, again, it's a 1, 2, 3, or 5 on the EZ, 2, 3, or 5 on the Advantage. Again, I mentioned the elimination periods. They're going to go all the way 60, 90, 180, 360, 2 years on some of those, so it's the same type of elimination periods. I had mentioned the grading. Again, to reiterate, it's 40% on the first year, 75% grading on the second year, and then we cover you total 100% third policy year going forward. Unique case design.
I'm sorry, I want to interrupt real quick. Some brokers ask the question, they think it means if somebody files a claim in the first year of the claim, we're going to grade it at 40%. Some people think that could happen like after the policy's been enforced 5 or 6 years. What it exactly means is if they file a claim in the first policy year, we would grade and only pay the benefit at 40% for the duration of the claim, or 75% if they file in the second policy year. Once they've had that policy for 3 years, there is no more grading. It's a question that I do get often, so I thought I would put that out there to clarify that a little more. Thanks, Jeff.
Thanks, Trish. And again, on the premiums, they are level all the way out to age 65, the EZDI, and then premiums will increase at the end of the renewal, obviously with the attained age of that insured. So if you have a 5-year term, we're going to re-rate it at 5 years older from the first policy that was issued. On the exclusions, reductions and limitations. With the EZDI, we can extend the elimination period and we may exclude some conditions. With the Advantage on the Lloyd's, again, think outside the box, think very creative. We can have a permanent grading. We can reduce the benefit period, reduce the benefit amount. We can extend the elimination period. We could exclude some conditions. We can grade some conditions and have different grades based on different benefits. So we can be very creative with this Lloyd's policy and try to meet your client's specific needs and try to help you sell that case. And that's what we're trying to do, is give your client the protection that's needed, and make it affordable for them, and make yourself happy on, at the end result, giving something to your client and then making a little money in the process. Own occupation. We do offer own occupation on most of our plans. It's going to be for the full benefit period. On some of our plans on the ECD, when we get to the blue-collar occupational classes, we can just give a 2-year option on that with the ONOC, or we may even be able to do that with a rider, extend it to the full, but it is going to be a 2-year base with our blue-collar plans. On the Advanced DI Lloyd's, it's going to be ONOC for the full duration of that benefit period, or depending upon whatever benefit period we've chosen. When it comes to mental and nervous, and this is a hot topic within especially the impaired risk of what we deal with, given the nature of traditional declines with mental and nervous, is on the Lloyd's it's going to be totally excluded, so we are not going to cover anything. On the EZDI plan, we will offer some coverage, and what that coverage is basically it's going to be a 6-month benefit period and will provide 50% of your benefit. So there is some coverage there. Again, the cost, EZDI is going to be a little more pricey because it is guaranteed renewal. It's a level premium. It's only underwritten once. And again, it's going to be fully 100% coverage after the 3rd year. The Advantage DI is going to be a term product. It's going to have, a 5-year term or 2-year term. We're going to renew it. It's going to be at a higher premium based upon age. And there is a chance that the health could change and it may come down with a different offer. But what we're doing is giving your client 2 different options, something that they normally would not happen. And basically the IDU and the FSU, it's structured differently, but it's going to be underwritten by the same underwriters. The same underwriters that have 25, we've had 25 years experience with the FSL. I think Trish and I had added up all the years of our underwriters, and it was close to, it was well over 100, I think, Trish, of the years of experience.
Fine.
Just a wealth of knowledge in this specific marketplace, and we feel that we are the best at what we do because of the history, the education, and the experience that we have underwriting these cases. Well, how do we underwrite that? What are some of the issues that we face? We face medical issues that I've harped on. We have financial declines, somebody that's declared bankruptcy, somebody that has a high level of unearned income, somebody that has excess wealth that a normal carrier will not offer because they have too much wealth. These are some of the cases that we can underwrite, and what it does for you is it makes you look like that expert and saying, hey, don't worry, I think we can find something for you, just give me a little while, get all the information, and go to your Plus Group carrier and say, hey, I want to go talk to FSL and their Lloyd's syndicate and see what we can do. What you're going to be able to do is you're going to be able to go to a broader target market. You can now take all of these cases that maybe you have been declined in the past, and now you can comfortably say, you know what, don't worry, I think I can cover you. Give me some information, let me go to the marketplace, and let's get back some offers. So you now have a huge marketplace to cover. You're just not restricted that if somebody comes to you and says, with a litany of medical issues, you can say, I can't help you. Now you can say, I can certainly help you. Let me see what we can do. With our ability to offer 90% of all cases we see, it's going to be a one-stop shopping for you and with the Plus Group. Again, I had mentioned on some of the cases that we can write on the financial cases, and it's going to allow you to open up your underwriting or your case file and say, hey, what can we do here? We don't have any maximum participation limits. We don't have an IMP table. We're not like your traditional carriers. We're going to take a look at the case. We're going to make an offer based upon in-force coverage based upon the income that is, justified, and we're going to give you benefits up to 60% of your income. As you know, in the traditional marketplace, once you cross that threshold of $100,000, most traditional carriers take you down in terms of coverage. Where if you're making $300,000, $400,000, $500,000, you may be only being covered for 50% at the end of the day. We're just going to give you 60%, and that's what we're going to be sticking to. Again, high net worth or unearned income. Most of these carriers on the traditional side is going to be uninsurable, even if they don't have any medical history. We now can offer that to your clients. We do not reduce the benefit or decline coverage based on unearned income, and whether that's rental properties, investments, any type of pension income, we have the ability to make some offers on that. If you have somebody that filed bankruptcy and they were just recently discharged, that bankruptcy was discharged, we can offer that client some coverage. Again, we can go ahead, Trish.
Yeah, we can offer it immediately. I believe in the standard market, they want them to wait about 2 years. So if you have someone that doesn't have any medical history but had a bankruptcy, we know in that case we can be like a gap coverage to cover that 2-year period, and we're okay with that. So, if your client really wants some coverage, they should get it right away, get the 2-year, apply with us for the 2 years, and then once they're eligible to go to the standard market, then they can just move over to the standard market. Go ahead,
Correct.
Jeff. Thank you.
Yeah, and then with the, I had mentioned there the complex cases and the issue limit, we could, regardless of that occupation, if it's a blue-collar mechanic making great money, we can give him up to $15,000, 60% of his coverage, where you're going to run into some problems with some of the other blue-collar products out there or traditional carriers that don't want to offer those blue-collar business owners that are making good income. We can cover that for you.
We'll give you a plumber. We'll give a plumber or an executive 60% of their income, regardless of the occupational class. We do have some ineligible occupations, which I believe we get into later in the presentation. We'll talk about that later.
That's correct. Again, unearned income. I don't know if you want to talk on this, Tricia, a little, but we're not going to reduce your benefit or decline it from somebody that has rental properties, investments, or pensions. We're going to take a look at that.
Yeah, I've seen it in the standard market. I don't know exactly what their formulas are. I've seen some that say, they've got their unearned income is 60% of their earned income. We don't want them, or they'll reduce it. We just don't even look at the unearned income at all. We don't factor that in. We're going to insure your client based on their earned income. So make sure anytime you have any financial declines for any reason, reach out to one of your Plus Group general agencies and partner with them so they can help find coverage for your client and bring them directly to us.
And the same goes with the high net worth clients. We're going to take a look at everything. We're not going to reduce that coverage. We will entertain coverage for those high net worth individuals. And again, bankruptcy, we just talked about that. Now we're going to go into some of the medical risks that we face. Again, what this is going to do, it's going to broaden your marketing in terms of target market. You will have the ability to say, yes, I can cover that, or I think I can cover it. I have a couple options. Let me go to them instead of saying, no, we can't cover that right out of the gate. Let's just give you a couple examples. Alcohol, drug abuse. As long as there's no evidence of that alcohol and drug abuse within 1 year prior to the application, we're going to be good to go. Anything less than a year is going to be very difficult to underwrite.
Yeah, we would just postpone it until they're 1 year out from any alcohol or drug abuse. And I'll tell you, if you have someone that is just, like 3 months away from the 1 year mark, 2 months more so. When I receive inquiries from the field saying, hey, I have somebody that is 10 months of alcohol and drug abuse free, at that time I'll tell them, go ahead and send the application in, because by the time we get it set up, the time it takes to get medical records, which I'm sure you've all experienced, sometimes doctors can take, we average it to 1 month, but that's because we have some doctors that take 2 months and some doctors that take 2 weeks. So once you're about 10 months out, you can go ahead and reach out to your Plus Group partner and get the application process rolling on that with us. Thank you.
And then some of the and then some of the cases that you'll see that are going to be very difficult to underwrite in the traditional marketplace are clients that have any type of autoimmune disorders, especially if they're being treated with steroids or immunosuppressants. And these cases are going to be your ulcerative colitis, your Crohn's disease, your rheumatoid arthritis. These are all types of cases that we can make offers on today. And then your height and weight. You're going to see a lot of cases decline because of height and weight. Our guidelines are very, very liberal, for non-diabetics. When we have diabetics, we have to switch to a different chart because it's a little more involved at that time. But here are some cases. Just take a look at this. You know, a male 5'5", 351 pounds. That's going to be a decline all day, every day with a traditional carrier. We will be able to make some type of offer for your client right here. Trish, I think I just saw one came across that was like 400 pounds, and we were able to make an offer.
They were probably at 6 feet, 6 foot tall. I'm sorry, 6 foot tall. We can hit around 400. I don't have the chart in front of me because I'm in a different office. But I know I've approved clients over 400 pounds that were non-diabetic, of course. But yes, that is how liberal our height and weight underwriting guidelines are. That is for under the Fidelity Security Life product. You know, we get into the Lloyd's product, we're still able to approve it. Of course, it's still at a much lower premium, but we would shorten the term on that a little bit just to be able to, you know, underwrite the case again and look at it to see if anything develops. But I'm sure it's got to be a good peace of mind to know that there's such liberal height and weight underwriting guidelines out there and availability for coverage for your clients that have height and weight issues. Thanks.
And then, a couple more cases here. You know, your back and your spine disorders, surgeries. This is something you're going to see in that traditional marketplace. We can offer clients to have these issues. And even if they've had recent surgery, we have the ability to make some type of offer. It may be an exclusion, but we will make an offer to them. Again, diabetes. This is something that insulin dependent and the juvenile onset diabetes is going to be a decline every day with your traditional carriers. It's something that we cover on a regular basis. And, you know, so don't shy away from this when you're meeting with the client. We certainly can help you here. Other cases, hepatitis B and C, your kidney disease, your mental and nervous disorders, you know, we can cover all of these types of cases. Cancer history, if you're 2 years removed from treatment, you know, we should be able to cover some types of cancer, even sooner on some of others less than 2 years. Your coronary artery disease, stroke, bypass surgery, again, all types of cases that we can cover on the medical side. We do have exclusion riders. You know, we will make that depending upon what we see as an impairment, and depending upon what we see in terms of medications used, how that treatment is going, has it been sustained for a while and everything is in order under that treatment, or have they not been following the medication as should have. You know, all these things are going to go into how we look the case and how we put exclusion riders on there. Let's talk about that occupational risk. Trish had mentioned that earlier. These are some of the cases that we can offer, again, that your traditional blue-collar carriers won't offer, and as well as traditional. Seasonal workers. You have a construction or a landscaping person. As long as they meet the minimum income requirements and they average 30 hours per week in a 12-month period, we're going to be able to cover them. This goes especially for maybe those folks up in the Northeast where the construction and landscaping business goes away for the most part during the winter months, and maybe they're doing snow plowing or something along that line. As long as that 30 hours is averaged out throughout a 12-month period, we're going to be able to insure them. Home-based employees who work out of your home 100% of the time, we can offer that a 5-year benefit period. We can consider police officers, prison guards, pilots, flight attendants, air traffic controllers, authors, writers, tattoo artists, musicians. When you're with the traditional marketplaces, they tend to be a decline. We will take a look at these folks. Trish, I'm going to let you walk through. These are some examples of some recent cases that we've underwritten. And if Trish, you want to just walk through these, that would be greatly appreciated since you're the underwriter here.
I'll be glad to. Thanks, Jeff. And most of these are going to show what offer we made on the Fidelity Security Guaranteed Renewable product versus the Lloyd's term product, the term product being less expensive, but a case that will be looked at again after the term is assigned with increases in premium. And thanks for all that information, Jeff. It was great. This particular case study here, we had a 32-year-old dentist who recently developed idiopathic neuropathy, which is nerve-ending damage. He was postponed in the standard market for 2 years until the condition could be monitored further and stabilized. They don't like something that's brand new diagnosed. They don't know how it's going to progress, or if there's any type of underlying cause. Us being an impaired risk carrier, obviously we're going to be more aggressive and make a more aggressive offer, or we wouldn't be here. So if you have cases that are declined for something like that, I keep reiterating, it's great to reach out to your Plus Group partner, because they have direct access to us and our underwriting team here. And what we did on this case, we made an offer. A 2-year benefit period and a 2-year term was made under the Lloyd's product. And this is where the Lloyd's product comes in, may be a better option when you have a postponement for 2 years. You ask for just a 2-year term because after 2 years, you believe the standard carrier is going to approve the case. Of course, you try to get them to underwrite it a little bit ahead of time and see what they would do. And if not, then you stay with us, with the Lloyd's or the FSL, depending on what your client wants. But in this case, we made an offer of a 2-year benefit period, a 2-year term with an exclusion for any type of neuropathy. Hold on, I have to move my screen around a little. I can't see it. The annual premium for the Lloyd's product was $1,867. Now, the Fidelity Security Life product is a guaranteed renewable product, and as you heard Jeff say many times, it's never re-underwritten again. Once we approve it, it's a level premium until the client turns age 65, and then the premiums change for the last 5 years of the policy. So with taking that risk on of chronic conditions and severe conditions, it's much more pricey. So you have to judge your client's tolerance, whether they depending on the situation, whether they're willing to spend the money. In this case, with them having only a 2-year postponed, they want to take this case, the Lloyd's product, because if you see the Fidelity Security Life product, $7,664. I have to say, this is my opinion, as I was a broker, I would take the Lloyd's case in this situation and then try to go to the standard market. If it gets worse and they get caught in the standard market, you obviously need to come back to us. So we were able to offer a much lower premium for the Lloyd's product with a shorter term, since there's a very high chance we know the client's going to transition back to the standard market. And this is the flexibility in underwriting cases that allows us, between the FSL product or the Lloyd's product, to be the best fit. We know that having these options is going to help you sell more cases and place more business. How do you control the slide? Jeff, can you switch it to
I got it. I'll do it. I got it.
Thank you.
Let me see here.
All right. Our second example was a 32-year-old physician, history of ulcerative colitis, which is one of the autoimmune disorders Jeff was talking about earlier. It's treated with Humira, which is one of the biologics. We call it an immunosuppressant. It's really like an immunomodulator, but a biologic. These are those types of medications you see on the commercials on television, where after they mention the medication, they talk real fast and give you about 30 sentences of all the side effects that the medications have. Even though it's helping a lot of these conditions, those medications are very, they have a lot of severe side effects and can cause a condition that could disable a person in and of itself. Thus the reason the standard carriers are not interested in these types of cases. But we will look at them. So this 32-year-old physician with ulcerative colitis treated with Humira was able to obtain a 5-year benefit. It says 4-year, but we actually gave it a 5-year benefit and a 5-year term under the Lloyd's product with an annual premium of $2,170. While we offered that Fidelity Security, the guaranteed renewable product also, but they both had exclusions for this condition. The difference is in the premium, the Fidelity Security product, which is guaranteed renewable, was $5,720. Again, in my opinion, just being an underwriter and seeing how these conditions change, in this particular case, I would try to persuade the client to go to the guaranteed renewable product because this condition can get worse. The medication could cause problems. They may have to be, they're definitely going to have to be re-underwritten under the Lloyd's product. They could end up being uninsurable. To me, this is a situation that you would want to consider, chalk your client into considering a guaranteed renewable product. Well, I did want to say this too. They both, go back. Can you go back for a second?
You want to go back? Yep.
Yes, I apologize. Thank you. In this case, though, this was a young physician. If he can't sell that $5,720 premium because it could be just too much money, you might want to recommend that they go with the Lloyd's option at first because they're only earning $75,000 right now. And then once his income increases, then you talk him into moving to the guaranteed renewable product once he can afford it, just to have peace of mind for that guaranteed product. Okay, thanks, Jeff. You can move to the next slide.
Okay.
Thank you.
Yep.
This is case C, a 52-year-old CPA with a history of recently diagnosed mild obstructive sleep apnea and a history of a herniated disc in the lumbosacral spine. We would offer a 5-year benefit with a 3-year term under the Lloyd's plan to review the stability and progression, if any, of the sleep apnea. The reason being that the shorter term on this one is because it was just recently diagnosed. So we'd want to, after 3 years, we would take a look at it. We'd send out the medical questionnaire. If there's been no changes in anything, then we would probably, at that point, give them the next term would be a 5-year term. Actually, what we did, we did not exclude the sleep apnea, though. We graded it. This is where Jeff was talking about the flexibility that we have with the Lloyd's product. The Fidelity Security Life product is a filed product. The grading is set. It's in the contract. It can't be adjusted. But on the Lloyd's product, we can grade it. We can be very creative in our underwriting. And since it was mild, I thought I was comfortable instead of excluding the sleep apnea. I gave it a shorter term, but I graded it saying that if they filed a claim in the first 12 months of the policy, that we'd only pay 40% of the benefit if the claim was for sleep apnea. If they filed a claim in any 4 of the remaining years of the 5-year benefit period, we'd only pay 60%. But we did put an exclusion of the lumbosacral spine, and that annual premium was $8,180 for Lloyd's. An FSL policy would be issued with an extended elimination period only of the lumbosacral spine, but with no modifications for sleep apnea. Our underwriting differs for the guaranteed renewable product in some cases because of the difference in the cost. The cost covers us more. So we're very high risk there and highly aggressive and not excluding as many things as we would on the Lloyd's product because of the difference in the price. So the Fidelity Security Life policy would be $12,100. But you see the difference in the premium. If you would turn this person to 32 instead of 52, you'd be seeing about a $2,000 a year Lloyd's premium and about a $6,000 Fidelity Security Life annual premium. On the Lloyd's, though, if we chose, you came back and said, this is still a little too pricey. Instead of grading it, we could exclude the sleep apnea. I don't know that a person thinks they're going to fully become disabled because of sleep apnea. And that way, then we could get the Lloyd's premium down to $6,500 per year. This shows you the flexibility we have with the Lloyd's underwriting to tailor it to your client's needs. So if you ever get a quote on a Lloyd's product and you think it's, it still seems a little pricey, your client wants it a little bit lower, reach out to your Plus Group partner. They can reach out to us and ask us if there's any way we can lower the premium. We get very creative with our underwriting here. You know, this way we think it's great that we're able to have this Lloyd's plan. Thanks, Jeff. Next slide.
Yep. Last one, I think.
Okay. Good. Then we have time for questions. This one's a 55-year-old plumber with a history of minor and degenerative changes in the cervical spine and arthritis in his hips that required steroid injections. We offered a 5-year benefit period with a 3-year term for the Lloyd's product, annual premium of $5,500. It says per month, but that was per year. The cervical spine was graded at 50% of the benefit for the full benefit period. Since the degenerative changes seemed stable over the past few years and a 3-year term was assigned, that allowed us to look at the case again if needed. Hold on a minute, I got to move my screen around. Also, there was an exclusion added for the hip. I can tell you under any product that we underwrite, Lloyd's or Fidelity, if there's any joint replacement, that's a permanent exclusion. The FSL policy would have the hip exclusion also. But under the FSL, again, I say our underwriting is more aggressive, and we're able to be more aggressive in certain cases because the premium covers that and allows us to issue policies with less exclusions than the Lloyd's product. So you're looking at a difference of $5,500 for the Lloyd's or $9,000 per year for the FSL. And actually, to be honest, our Lloyd's premiums are coming down. We were fairly new in this market, but we've gained much more experience, much more trust and confidence in us from Lloyd's, and they've allowed us to be a little more rate aggressive on the Lloyd's product. So the risk pools that I'm assigning now, I'm able to come down about one more risk pool. So had I prepared this slide after, you know, we were given the rate relief from Lloyd's, that Lloyd's premium actually at this time probably would be down to more like $3,500 or $4,000. So there were just some examples of some of the medical cases and the way we can underwrite it, the difference in the cost, and how we can help you with some decline cases. Okay, Jeff, I'm finished there.
Yeah, basically at the end of the day, is what we provide here is a whole new world of possibilities by managing those impaired risk sales, efficiently. So if you think up front you have a case that is not going to make, it through the traditional marketplace way up front, you're doing your field underwriting, contact your Plus Group office, let them know what you have in terms of a client in the impaired risk or occupational or financial difficulties you have them send it over to us, and we'll provide 2 different quotes for you. And then on the other scenario, as we all know, there are cases that we're going to process through the traditional marketplace where your client's not going to be upfront and give you all the details, and you're going to be surprised that something is amiss medically, financially, or even occupationally. And at that time, before you go to them and say, hey, I have a decline, most Plus Group carriers are going to come to us right after they have that decline, give us as much information as they have, and we're going to provide you with the options necessary to go out to your client and give them the good news and the bad news. Bad news is you would decline. Good news is I have 2 different options for you. And with that, Tracy, if you want to open it up to questions, we tried to keep it short and sweet here for everybody, not take too much of your afternoon on a Wednesday. Tracy?
Yeah, if anyone has any questions, like I said, there's a question pane on your control panel, and you can type them in there, and we can answer them. Again, you need to go to the question pane and just type in the questions. At the moment, we don't have any, but I think you guys did a really thorough job. Again, any questions, please type them in, and we'll address them. If not, if you have any questions afterwards, you can email me, Tracy, Tracey, at plusgroupunus.com. Also, this webinar has been recorded. You will receive the actual PowerPoint along with the audio, and you usually will get that in about 24 hours. So you should get that by tomorrow. And if you don't, feel free to contact me. And again, if you have any questions, type them in. I think Jeff and Trish did a great job, so obviously there are no questions at the moment. So again, thank you, Jeff and Trish, for helping out today, and thank you everyone for your time. And please check the Plus Group website, www.plusgroup.us, for more information about the Plus Group and about this webinar and future webinars. And again, Jeff and Trish, thank you so much for your time today.
Thank you very much, everybody. Appreciate your time.
Thank you, everyone. Have a wonderful day.
Bye-bye.
Bye-bye.
Bye-bye.